Mr. Parekh, a couple of questions to you and then to others. The first one is with respect to the guidance of 6 to 8%. What are the factors you have taken into account while going for that guidance? You spoke about the strategic review which you have done. How is this different from the strategic path which was laid by your predecessor? And there has been a sale, or planning to sell Skava and Panaya. What is the reason for that? Do you think in hindsight that was a wrong acquisition that you did? That's one. For Mr. Rao, you spoke about digital. What is the kind of the $905 million TCV, what is the new orders which came from digital, and what kind of margins are we seeing in that? Are you seeing still small deals coming in or bigger ones coming in? For Ranga, the margins 22 to 24% guidance, you are bringing it down by a bit. What is the reason for that? Are you seeing any headwinds coming in the quarter?
So let me start. Thank you. I think the three components or three questions. First, on the guidance and revenue, my sense of the market is we see a market that is in a stable to good condition. Our own businesses are doing well, as I described some of them. You heard from Praveen on the specifics of some of the other businesses within our mix. Given those external factors and our own positioning, that was the range of guidance that we developed. In terms of the strategic review, the approach I've taken, as I shared, was really meeting with our clients, our employees, our leadership, and then reviewing our portfolio. What you heard from me about our clients is really what's informed where we are going. Our strategy is built on where our clients' digital journey is taking them, and for us to have relevance for the future with our clients. And that's really why we have the four pillars. The first being agile digital, the second being energizing our core, the third being reskilling our employees, and the fourth pillar being building localization in the markets we operate in. In terms of Panaya and Skava, we did a strategic review of our portfolio. We looked at where our strategy direction was, which is what I just described. It comprises of digital and our core IT services and a strong suite of product portfolio. For example, Finacle platforms such as Edge, Nia, which we are further expanding, and McCamish, which is an insurance platform. And within that strategic review, we decided to initiate active interest in Panaya and Skava from external buyers because it did not fit all of the criteria we have today for scaling our businesses, given the conditions we have for the business today.
On the large deal front, 32% of 905 million TCV was net new. We don't track how much of percentage of digital from a large deal perspective. But there is an element of digital in most of the large deals, particularly with respect to cloud transformation, modernization, and so on. And in terms of overall the size of digital deals, the sizes are definitely increasing. But the deals are also becoming more complex because now digital is moving beyond the user experience, the front end, to modernizing the back end, analytics, the integration between the front end and back end, and so on.
And the operating margins. As you know, for this year, that is fiscal 18, we had given the guidance of 23 to 25. Finally, we delivered 24.3, higher than the midpoint. For this year, the primary reason, there are four reasons. One, clearly we want to invest in digital wherever we are underinvested. Two, we want to foolproof our US talent model. Three, we also want to revitalize our sales for further accelerating the deal wins. Four, we also want to reap 24.3, higher than the midpoint. For this year, the primary reason, there are four reasons. One, clearly we want to invest in digital wherever we are underinvested. Two, we want to foolproof our US talent model. Three, we also want to revitalize our sales for further accelerating the deal wins. Four, we also want to repurpose our employees given our digital journey. So these are the three things. So that's why we have said 22 to 24. But nevertheless, all the operational efficiency, productivity focus that we have shown in the last 2 years, there will be unwavering focus on that. but at the same time, we want to invest to leverage the business opportunities.
Just to add, the write-down on Panaya and on Kava, if you can elaborate on that.
Sure. See, Infosys has over 40 subsidiaries, right? Of which Infosys Limited is the largest group. So Infosys Limited invested in Panaya and Skava by way of acquisition, if you recollect. Now, for the reasons that Salil mentioned, the company is exploring opportunities for potential buyers and evaluating them. Now, once such a decision is taken to evaluate sale, we have to classify them as assets held for sale in our financial statements. That's the requirement of accounting standards. So we have done that. And after reclassification, we have assessed the fair value and taken an impairment. In the consolidated books of Infosys Limited Group, it is $18 million. But the write-down of value in the standalone books of Infosys Limited is $90 million.